So yesterday I talked about my dashboard and how it works and the way it calculates the whole thing. But today I want to just show you guys exactly the whole process of how this data becomes updated. Though I won't be updating this particular data here simply because of the fact that I'm not currently using my laptop. Hence, if I try to update it, I will have to end up selecting so many selections. But let's just head straight into it. So first and foremost, what I need to do is I need to go into investing.com and I'll look out for the latest set of news. Now I have the latest set of news here. This is today's news and they're all Japanese and Australian dollar news. So what I do is I take all of this all the way to the point where the actual stops. I don't take anything above the actual because I will end up deleting that if I do. I'm going to go to the Excel sheet and I'm going to go to the data cleaner page. Now this page is meant for me to be able to clean up the data upon receiving it. So let's head straight to the data cleanup, and what I'm going to do here is I'm going to paste as values. So one thing you notice is a lot of the stuff go wrongly. Now I'm going to just take this up to this place and I'll set up the proper date for it. Make sure that date goes all the way to the right place we stopped, which was right here. The rest of it is not business. So what I'm going to do is I'm going to delete all of that. So we stopped at economic watcher current index. Let's confirm that is what we stopped at. You can see for July, that is where we stopped. The economy watcher current index for July. So going back here, what I'm going to do now is I'm going to try to remove the space that is appearing before the letter, and I'll take this, highlight the whole line, and then try to replace it by removing the words and just leaving the space right there. And I'll replace all. So this way I have replaced the unnecessary information and I have literally completed the whole point. Oh, I made a mistake here. This is supposed to be all one date. Okay. Now what I do next is going to really lag any PC I put it into, because this is where Excel is going to do serious computation on its own. It's going to try to recalculate every single line and then produce whether it's the actual numbers, produce whether it's bullish or bearish, right? Whether it's bullish or bearish, normalize it, give me the type of news it is, give me an indicator rank, and then the actual points that particular news release got. So let's go. So just like I said, it is going to lag, but see, it's going to lag the book because it's still lagging right now. You can see my mouse is jittering around very slowly. And okay, now that's done. So you can see from the recent news released today, I'm already getting proper sentiment. You can see the GDP news for Japanese yen is bullish. The capital expenditure is bearish. The external demand and GDP price index is neutral. The GDP for private consumption is bearish. The building approval and private approval for Australian dollar is neutral, while the economic watcher current index is bullish for the Japanese yen. All of this is going to recalculate the current 14 days trend of the Japanese yen. So if I scroll down to days before and I put it at 0, you can see, because I've updated it, you see the ones I updated, and now the ones that are showing up as 0, you can see them, all of them that was just updated appears as 0. It automatically updates this sheet, and in turn that automatically updates these sheets here. The overall also tilts a little bit based on the information, while the 14 days tilts very evidently based on those information. And now it also boils down to every pair that has the Japanese yen within them. So if you filter out for pairs with the JPY, if I filter out for pairs with the JPY, you see that calculation has now been reapplied to every single entry here. Now, if I try to put that information into this place right now, it will take about 5 to 15 minutes. These are not like high power PCs, and my PC is not so high power either, but these are not high power PCs, and I don't want to lag this laptop for now. It's just an early morning show. I just want to show you guys the entire process of how my calculator is able to quickly recalculate. You can see I have quickly recalculated things belonging to the Australian dollar. And also, let's go to the Australian dollar pairs. You'd see the Australian dollar pairs have also been recalculated, giving them more bullish signal. You can see things like the Australian dollar, Canadian dollar has bullish, Swiss franc is bullish, Japanese yen is bullish. In terms of, now this is in terms of fundamental stance. Now let's go check out the chart for just let's just do 2 of these Australian dollars or 3 of these Australian dollars. Now again, I remember I say this a lot. Anything that has to do with the Swiss franc, I am extremely careful with it. Secondly, this has a very high variance. Hence, I don't want to even touch it. I like to look at things with very low variance. Anything below 1 variance, 1% variance is what I prefer to look at. In this case, we're going to look at the Australian dollar, Japanese yen, and the Australian dollar, Canadian dollar. So let's go straight to the chart. And we're going to go for the AUD card first. So, and you can see it is really pumping high. Let's go 1 hour. The news came out past 2:30 in the morning, and let's look for 2:30 this morning. And you can see that's this candle right here, the heavy candle right here. As you can see, this particular candle is the news saying, yes, we're having positive stance. In as much as it is a neutral ground, like neutral happenings, we are having a good reading against the Canadian dollar, because the Canadian dollar's news is not so good. Now let's go to against the Japanese yen and see, as that the Japanese news came out all the way from 12:50 till, and then another one at 6 o'clock. So, and all through that time, you can see just before 12 there was a massive push up, and then at 12 the news just danced around, and then at 6 o'clock the Japanese news came through with mixed movements. So the Australian dollar news came through, at 2:30. You can see where's 2:30. You can see this is a 3 o'clock candle. The effect of the news made it come down because it was neutral. But then again, the Japanese news coming out, still though it was bullish, like good news, you're expecting this market to go down. It is not going down because the overall situation is still bullish. So this is how I'm able to look at markets and filter out, okay, what bullish is good bullish and what bullish is bad bullish. So basically all I do is, when I look here and see, oh, slightly bullish, I'm going to be careful on taking bullish stance in this market. If I want to take a bullish stance here, it is slightly, it is not clearly bullish. I'm going to be looking out for places where I have supply zones being cut off. You can see this is a supply zone right here, and I have this supply zone actually, demolished. It's been beaten, and then there's a high right here, this high. Now I don't really care much about highs and lows. I care more about zones, right? I care more about zones, and I can see that this zone has been demolished. So what it means is, right now, see this candle down, up. If you look into the 4 hours, what happens is price has come into the zone, mitigated, and moved up. What I personally would love to do right now is to look for 1 hour proceeds, 1 hour situations, because I would have loved to take this when it came in down here and moved away. Like, I'd have loved to take it in the candle last week. I was busy trying to recreate a calculator, but now that I'm seeing this, I can now say, okay, it's good. I can take a stance to stay below this level, which is, I'm a swing trader, right? I'm a swing trader, don't forget. I can take a stance like this. I can take a stance like this and then let my trade run as much as possible. Normally, you're supposed to find a supply zone, the next supply zone to feed off of. You could do that with the daily or the weekly. People usually do the weekly. I prefer to do the daily and the weekly. This is the daily supply zone available, and then you put that in the weekly. What you end up having is this entire supply zone right here. So there's a high tendency price is going to keep pushing. Price is going to keep pushing till it meets this zone, and that is a 2.1 risk to reward ratio. So, but I'm not just going to dive into this trade. Remember, trading is not straightforward. We're not just going to dive into this trade. Why? In as much as all the news is good, why am I not diving straight into this trade? Because I want to see good structure, right? I want to see good structure. I want to see this market pull back. Now, again, I'm bullish, right? I'm bullish. I want to see this market pull back a little bit. It might just pull back before it moves up, or it might end up moving up a little bit first before it makes that pull back and move up. So this is everything about my trading plan, trading strategy, and the way I trade. I wait for the signal on the fundamentals, and then I go to the technical space to see what the market is doing. If I see a clear pullback into the fundamental expectation, I take it. If I don't, I let it run. It could go where it wants to go. You could, as a risk taker, you can just, okay, let's just take a risky trade. I want to take a risky trade, but this is a trade that will take a long time to work up, to work for or against our position, right? To take a long time for it to work for or against our position. In my opinion, looking at this on the daily, what I tend to see is price would most likely do this. Price will most likely do this. That's what I think price would do. I mean, take a good look at this structure. Take a very good look at this structure. You can see how wide the move is. This move, I'm expecting some sort of wild pullback for a wilder move. But then again, this market can deny us that. That's why I said I don't want to take a risky move right now. To me, this is me, buying at the top of a beginning of a pullback, and then that pullback would most likely wipe me out. That's why I want to be careful. All right, I would like to see this market do some good things for me, and that's all I can say. So stay safe, analyze properly, and make the market work for you and not you doing it for them. Peace.